Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from hundreds of successful individuals from around the world. I am your host, Ashutosh Garg, and today I'm delighted and privileged to welcome a friend, a fellow YPO member, and a very senior finance specialist from the UK, Mr. Andreas Schweitzer. Andreas, welcome to the show.
Thank you very much.
Thank you, Andreas. Andreas is the managing director of Arjan Capital. He is also an author, and all of you know I'm very partial to authors. So he's also an author of a book called The Trade Works. And as I mentioned to you, he's a fellow member of the YPO. So Andreas, let's talk about Arjan Capital, and I hope I have the pronunciation right. You are a specialist in trade finance. What is trade finance and why is it so important for organizations?
Thank you very much, Ashutosh, for accepting me on your exquisite show. And it is a pleasure to have a YPO talk here. And for your interest in trade, I mean, trade is what the world needs. It is very banal, but if there wouldn't be trade, there wouldn't be toothpaste in the bathroom in the morning, and there wouldn't be water in the fridge during the day, and there wouldn't be ice cream and many others. Well, to give you a figure, trade roughly accounts for $10 trillion or euros in the world. So 10 trillion is beyond my imagination.
Absolutely. I don't even know how many zeros it has.
The other figure, the other figure, which is quite impressive and sad, 2 trillion, 20% is not financed. So 20% of the world trade doesn't happen because the SME company doesn't get the money to do so.
Right.
And this is the opportunity and the problem we are facing, and this is even an issue the G20 is looking into, how to make sure that trade can be done.
Very interesting. And the size of the opportunity is 2 trillion of the people who don't get the trade, but are there different forms of trade finance?
Yes, you have you have what is called the factoring. So let's say you sell me something and I pay you because I'm a big company and can dictate the terms. I pay you in 180 days or 270 days, long time, but you want your money obviously immediately to have the cash to buy new material and to have new inventory. So you go to a factor, a company like us, like Artis, or you go to your bank if they do it, and they discount this invoice against the fee. So it's called invoice discounting, which is when factoring. The other big domain is what's called supply chain financing. You go to someone who helps you to buy the raw material, and then along the whole line. These are the two main forms. There is forfeiting, there is overdraft, there is working capital loans, but factoring is probably the biggest with supply chain financing.
You mentioned, Andreas, that the market for the people who are not able to get trade finance is about $2 trillion. What is the main obstacle for them not being able to get trade finance?
I think the biggest obstacle is our financial world today. That since 2008, since the big financial crisis we had, and with very much increased regulations, the Basel, known as the Basel Regulation 1, 2, 3, 4, banks have come under very big restrictions for trade finance. And it's a different business, trade finance and banking. So banks, large banks, like to deal with large companies. So large multinationals don't have this issue. This is a problem for SME, for the small and medium companies, or the Mittelstand, as you would say in German. And banks simply don't finance their mid-sized customer. And that's why hedge fund used to do it to a certain degree and still do it. And there are trade finance funds out there who provide this service now.
So again, I don't have much knowledge about finance and trade finance, but I'm trying to understand, if a bank does not do the trade finance and you are willing to do it, are you assuming a higher form of risk? And if yes, how do you mitigate risk?
Now, there are various risk appetites. There are companies who say, we finance the trade, open account. I ship to you because I know you for a long time and I know you pay me. So this is based on trust. You might say, I know Andreas a little bit less good. I'm sure he pays me, but it's good to have a letter of credit. So a letter of credit is simply a document where a bank issues basically a promise to pay when certain things happened at a certain date. So the product, the quality of the product is delivered on the agreed date, and then you get your money because I got your product, or the other way around. That's one way of doing it. The second major way is what's called credit insurance. Credit insurance is nothing else than someone else taking the credit risk. Most of the countries have export credit. India has it, Germany has it, France, Iran, even many nations have export credit agency where the government steps in as the lender of last, or the payee of last resort, in order to enable the national companies to do this. So now you go and say, okay, I sell to Andreas. I don't have a letter of credit because maybe the banks don't operate, maybe it's too expensive, but I go to the national credit insurance and ask that they insure my company. And now I have to be worthy to be insured. It's like a bank loan, nothing else. So these are the two biggest risk mitigation. The third one is, of course, you look at the company and say, are they paying their bill, or do they have a lot of outstanding bills? Because you don't want to call on the insurance, you want to avoid this. So we have a whole risk mitigation concept. This is a very structured process like any other loan.
Interesting. So on a lighter note, you don't have huge bouncers hanging around to go and recover your money. That's only
we're not running a discotheque.
That's only as an aside, Andreas.
Absolutely.
But the world is not an absolutely utopian world. There are countries which are easy to do business in, and there are countries which are difficult to do business in. How do you manage a recourse in some of the difficult countries?
I mean, to make a banal statement, the best risk is the risk you remove. And there are countries we don't deal with, simply because we don't think we are fit to go to court. For example, I don't see ourselves as a small firm to argue in Chinese courts. You know, if you are a big carp, if you are Tata and sell billions, you have a whole setup. You deal in China as you deal in many other nations. Correct. But here we are limited. So at the moment, our market is Europe, because what I always found, trade finance is a problem of frontier or marginal or emerging markets, but that's not true. The British, the Swiss, the German company have exactly the same issue. So we are focusing on a market we know, and at the moment we concentrate on Swiss factoring and trade finance. We look at Brazil, we like that very much. So we try to have a hub somewhere, and we avoid markets where we think that the jurisdiction is so complicated that the cost is bigger than the reward.
Fascinating. So when I was reading about you and some of the material you had sent to me, one of the comments that struck me was that investors should have trade finance as a part of an investment portfolio. Help me understand this.
Right. You know, with the first lockdown, we had to start reinventing ourselves. We deal in the Middle East, we deal in a few markets here. And the lockdown prevented us from attending these markets. And I was financing trade on a small scale as a private individual. And then the lockdown gave me the opportunities to think about this and say, why am I not doing this on a bigger scale? You know, we produce 5, 7, 10%, it depends the market, with a capital guarantee. So it's a bond-like product. This is not equity. If you're looking for if you're looking for the next Bitcoin and you like this volatility, you go to the crypto world. Correct. If you like venture capital, you go to the venture capital world. If you want a pension fund like of revenue and secure, you look at bonds, at governments, at corporate bonds, and at trade finance. And that's what I realized. A bank offers you stocks, bonds, real estate, crypto, if they are very wild, I doubt it. But I don't know anybody, including myself, who the banker has says, you know what, Mr. Schweitzer, why don't you put in some money in trade finance? And that's why I decided to put a fund together, and why I decided to write a book about, to bring this attention to the non-professional investor who doesn't deal with financial markets or that runs a business like you, me, and many of your listeners. But I think it's completely underserved and orphan asset investment category.
Incredible. I mean, I loved what you're saying, that trade finance investment is relatively secure and has a relatively stable rate of return, which is something you can't easily find in today's market.
If you take Switzerland, Switzerland pays today -3% interest rate in the bank. So for the privilege to put your money in a Swiss bank, you pay the banker 3%. That's how the market is. If we pay 5% and give a capital guarantee through the credit risk insurance, I mean, you have a very similar risk. You have an investment grade risk, because these insurance are all investment rated, at +5 to -3. The delta is 8% for the same risk. Incredible. So, you know, when interests go up to 10%, the world is a different one, but I think we are far away from it. Yeah. We have inflation, but we still have very low interest.
Fascinating. And how long is a typical trade finance deal? I mean, if I want to put, say, $1 million, how long will I have to wait?
I mean, the tenor of a trade deal can be 30 days, 60 days, 90, 120. This is where we stop. We don't want to go more than 4 months, 5 months, because we easily come then into sort of the fog of what is project financing and what is trade finance. But most of our trades probably are 40, 50, 55 days, so 6 weeks. So we get our money back every 6 weeks, and that's why we also can pay investors back every few months. So it's a very quick cycle.
Wow. Well, I hope a lot of our listeners are.
This is the cycle we like. Others do longer cycles. They mind to finance.
Fair enough. So, you know, again, another perspective I got when I was reading about you is that you are doing trade in Afghanistan and Iran. And as we speak, you're sitting in Iran right now. How are you supporting small businesses in these two countries?
And this is, we are helping on the import side at the moment, because the export side is talking about Iran, very regulated. You have foreign currency restrictions. It's very, very complicated. So I would say this is bespoke. And how Iranian, there's a lot of prepayment financing of a Iran deal is an art more than a science. Okay. Afghanistan has the issue that Afghanistan is not doesn't have a country rating from the big rating agencies, and I believe except one bank, most Afghan banks are not rated. That means a letter of credit for them is very difficult. So this is very much a cash society. But all this I'm telling you is pre-August, from when we were working under the previous government. We have no update now. We only know most of the banks are closed. So I would say until the end of the year, or also commercial flights resume, Afghanistan is a bit on a waiting list. It's because just lack of visibility. But I hope that we are back. We have a business there. We have an office there. I hope we are back in 2 months. We are very positive on the country, regardless of the politics.
Well said. And, the whole world has been impacted, Andreas, by the pandemic. And trade has come to, or had come to almost a halt, or had to a trickle. How did the pandemic affect you and trade finance?
I mean, the trade that boosted is the online trade. So the Amazon of this world, they made a fortune, and the many Indian and other online traders. But container shipment skyrocketed. A container from China to Europe normally costs $2,800. You got quote the last few weeks up to 15,000. What does this do to the famous toothpaste example? So the economy of trade gets a little bit distorted, and a lot of trade doesn't happen. And you have backlog, and you have, if you look at the UK where we live, you have partially empty shelves. I mean, I don't want to design a world war scenario of empty shelves. Of course, we are far from that, but it is the unhappy mix of Brexit regulations plus the pandemic, which led to a small perfect storm. But we have a supply chain problem. And John Denton, the General Secretary of the ICC, wrote this in his letter about a year ago to the Financial Times, that the G20 has to make sure supply chain works. Otherwise, we have to realize that things will be missing. Right. Now, we can also say, do we need a choice of 10 items? I mean, we will survive, let's put it like that. But I'm sure we will realize the spoiledness of the consumer, as it was the last few decades, has come to a halt. Correct. So it's an interesting experience, I would say, for everybody.
Interesting. So one more question regarding supply chain before I move to your book. What is the role that governments can play in safeguarding trade financing?
Certainly helping SMEs to have access to trade credit. That is encourage the banking world, but that's a dream, because the banking sector had a lot of issues the last 10 years, and they will decide on our own, and they will only take risks from the government if the government insures it. Now the question is the government here to does the government has to ensure the survival of SME companies? Maybe not, but it should support it very strongly. And I would say good financial conditions, because trade finance today varies extremely in its return from country to country. The rates in Germany and Switzerland have nothing to do with each other. It's about double to half. And now you would think Germany is double, Switzerland is more expensive here. So you have very lot of inefficiencies in the market today.
And I assume that demand supply really determines the pricing for trade finance also.
Yes, but there is of course a limit, because a product at the end in the shelf can only cost so much. You buy for your detergent, for your food, for your coffee. There's a limit what you're willing to spend. Correct. So even the cost of trade finance has its limit, and otherwise the trade is not going to happen. Yeah.
Well said. So Andreas, I'm now going to move to the next segment of our conversation. We'll talk about your book. And the book is titled Trade Works. And I think it is due to be released soon, or has already been released. But tell me about your book.
Yeah, we hope to be out. I would be nice to have it under the Christmas tree. It might be a little bit tough, because I'm just reviewing the last version of the manuscript. I decided to put down on paper what what I found, because there's not a lot of research about trade finance.
Right.
If you put in trade, if you Google trade, you get a lot of on foreign exchange. There are many university professor and business people wrote a lot of intelligent documentation. There's a lot of trade in the stock market. There is about of bonds. There's about real estate, but again, not much about trade, except you download data from the World Bank or from organized bodies who professionally write about this. So I thought I formalize a little bit what we wrote and try to spread the word that trade finance is a fascinating, underrated thing. And we're trying to explain what we do in this call to the non-financial professional, what trade entails. And it is a fascinating voyage and an interesting experience for a first-time writer like me. I didn't know what I was getting into.
In fact, the first time that you write is always the most exciting. And I'm sure I'll be looking forward to your second, third, and fourth books also. But,
I love your optimism. Thank you.
Thank you. But tell me, I've got time for one more question relating to trade finance and your book. How will your book help the small and medium enterprises?
I don't know yet.
Okay.
But my audience is certainly you and me. Okay. And many of the listeners who it will help if people decide to invest in trade finance with us or with others and put money into this asset class. It provides money for trade to SMEs. Because as I mentioned earlier, the big companies don't have an issue. They have their balance sheet financing in many ways. So maybe the SME CEO or CFO or chief of a region or sales finds it interesting and didn't know about the one or the other aspect. But I would say the companies know about trade and their options more often than not. But my book is more for the investor who looks for diversification, and hopefully they will consider trade for the Mittelstand.
Wonderful. And my last question to you now is, I'm assuming this book will be available on all the major e-commerce platforms like Amazon and others.
Yes, we will have I'm a friend of print here to send it out. I find it quite nice, a hard copy, but of course we have a Kindle version, we have an ebook, and I would be very happy to give ebook copies to your readers free of charge, of course.
Wonderful. That is such a powerful way to distribute one's book, and I know I've done that with one of my books. That if you tell, and all our viewers and listeners, I hope you've heard Andreas say that if you write to him, and I'm sure you can find him or write to us, we'll get you the details. He's willing to give you a free copy of his ebook. But Andreas, on that note, thank you so much. It has been such a privilege speaking to you. I remember meeting you many, many years ago in Geneva when you were doing something very different. I'm so glad I've connected with you as a trade finance guru, as well as, of course, a fellow YPO member. Thank you again and good luck.
Ashutosh, thank you very much for reaching out and your interest. It was really a privilege to be on your podcast. Thank you very much.
Thank you very much.
Thank you.
Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.